this video, let's talk about the Chaikin Volatility, beautiful dynamic volatility indicator that helps us, the traders, to understand the phases of the market, high volatility, low volatility, when we are about to see potential reversals, when we are about to see potential consolidations. And it's very important to mention that this indicator is not here to spot directions and give any trading ideas or trading signals buy or sell by specific levels. Instead, it comes to show and focus purely volatility, what phase, what current market conditions are at, and do we have a logic to be in the current market conditions because the volatility is so big, or should we wait for lower volatility? So all these are things this indicator comes to help us with. So the indicator calculates the percentage change of the moving average of between the specific range, high-low range, over a given set of time. So the way it works on cTrader, it is usually works with the moving average of 14 over the rate of change of 10. And with the calculation, that's what you see right here on the chart, on the indicator. So with that in mind, where do we find it? So we go to the indicator sections, the volatility and Chaikin volatility, and you would see here that usually it is applied to the SMA, the simple MA method, over a period of 14 with the rate of change of 10. You can design the line, the levels as you wish, and that's what you will get. So the read of this indicator, like many other volatility indicators, when the indicator rises, it shows expanding volatility and bigger moves on the market. On the other hand, when the indicators falls, it shows contracting and decreasing volatility and expectations of a potential reversal or consolidations period. So this indicator could help us with verification of breakouts. It could help us with earlier spots of potential reversals. After peaks on the volatility, we can expect the tops and some drops coming after that. It also could help us with adjusting the protection levels, the stop losses, based on the developing market conditions. On wilder market conditions with higher volatility, we know that we should be protecting more because the market is more volatile. And on the other hand, on lower volatility market conditions, more quiet market conditions, we can go with smaller range of protections. Many times this indicator helps us to spot potential reversals, and especially before it happens. So for example, we can see that the market is climbing here with lower volatility, and at that point it starts to increase. Since this is a bullish trend here with a sequence of higher highs, higher lows, it shows us that the volatility increases, and a very good chance the buyers will step in to push that further upside. Similar happens here after lower reduced volatility. We can see that the indicator starts to rise before the price actually joins that, and the buyers actually manage to push the price and create another run. And also, as I mentioned before, after peaks are created, it many times help us. Look what happens here. We start to see lower peaks, which means after this bullish momentum, there is a very good chance we will enter some consolidation, some ranging market conditions, and many times even spot earlier reversal signs. Want to learn more indicators? Want to learn more trading tricks? Make sure you follow this channel.